Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. The stock was down 5.93%, and it actually went down even more after hours. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. So let's go ahead and take a quick look at a 9 months daily chart. Back in January, it tried to break this very strong resistance of 120. And I say it's a strong resistance because back in July last year and then in March of last year, it couldn't break that 120 resistance. So after hitting that resistance, we sold off to a low of $80. It was oversold on the RSI and it had a inverse head and shoulders pattern, which is a bullish pattern, and it played out very well. And it rallied all the way up to 100, and now we are trying to fill out the gap right here from 86 to 90. So in the past, all the gaps have been filled. There was bad news after hours. So this is the article that came out. It says the forward sales revealed through a Financial Times analysis of regulatory filings sent by post to the U.S. Securities and Exchange Commission will eventually cut SoftBank's stake in the $262 billion Chinese e-commerce group to just 3.8%. The contracts allow SoftBank the option to buy back the shares, but the group has settled previous deals by handing over the stock. The Japanese investor once owned as much as 34% of Alibaba. SoftBank sell-down comes at a pivotal moment for the Japanese group, which is planning a blockbuster listing of UK chip designer ARM as it seeks to recover from a spat of failed investments and unprecedented losses. For Alibaba, it will mean the retreat of a long-time backer just as a Chinese group attempts to reinvent itself by splitting into 6 entities. SoftBank's selling spree has come as the Chinese group's shares have plumbed 6-year lows, a disappointing conclusion to one of the most successful technology investments ever made. Some paid $20 million for the bulk of SoftBank's holding in the fledgling Chinese group more than 2 decades ago after meeting Jack Ma. So that is why there is a huge sell-off after hours because of SoftBank selling most of their stake. So you can see it did hit a low of 89.50. It is recovering now, but we don't know what tomorrow's going to look like because not everyone has access to after-market trading. So this sell-off creates a good opportunity for long-term investors, but just remember, Alibaba is actually a very volatile stock. It sells off and consolidates for a very long time before making a big move like it did 2 weeks ago. So right now it is under 100, which is, I think, a good deal. But again, we don't know what tomorrow's price is going to be, and this gap might get filled. It did get filled a little bit, but it might get filled all the way in the near future because in the past, all the gaps have been filled. People are still buying call options. We can see for next week expiration dates, a lot of people buying the 100 strike calls, 16,000 volume traded, 30,000 open interest. Tomorrow is not going to look good unless Alibaba recovers. So if you're planning to buy call options, I would suggest going further out in time. They might get a little bit more costly, but it gives you time for the stock to move in your favor. Because like I said, with Alibaba, it sells off or consolidates for a long time. I've been following Alibaba for 3 years now, and I've lost quite a bit of money on these call options. So the best thing you do really is to buy common shares. At least that way, there's no expiration dates. So that's pretty much it. Hopefully we get a small recovery tomorrow. Let me know in the comments if you guys are buying more Alibaba, and thanks for watching.